This is Seewing Yee and Richard Advani, and we're going to talk about the winners and losers in this housing market. I'll get to the point. I'll give you a high-level conceptual perspective, and Richard Advani going to do a deep dive. However your thoughts are, I'm okay with that. Here it is. The winners and losers. The winners are real estate investors, mom and pop, small investors, whoever you are out there. Those of you understand whenever there's a small crisis in a marketplace, there are opportunities. As a result, when you look at all the benefits to buy investment property, especially you can buy down the rates or the builder incentives that are given you and in different part of the U.S. market, especially the Midwest and the South and Southeast. Those are the best areas to buy for mom and pop investors, if you will. So the winners are buy cash flow in a good market, good housing market, affordable market, in a fast-growing market. Take action because you will get cash flow, okay? Cash flow would not going to be as high as before years ago. It is what it is. It's going to be good. You buy and hope for the long term. So the first winners are real estate investors who are smart, who understand what's going on, who are take action. Those are the first group of winners. The second group are primary homeowners. For those of you who qualify, I know right now we have a 40-year affordability crisis. A lot of people are on the sidelines because they cannot qualify anymore due to the skyrocketing home prices in the past few years and the elevated mortgage rate. So a lot of first-time home buyers especially are unable to qualify. So we can't, those are okay. We feel okay with that. But for those of you, for the primary home buyers who qualify, who to buy a primary home, if you have the wherewithal to take action and buy your primary home, buy in the whole at least 7-10 years, you are the second category of winners. And the final winners are the builders, the nationwide and the local builders in all the markets. Why? Because the resale market has completely dried out. The resellers, the current mortgage holders right now, they are sitting pretty on their historical very low mortgage rate. They're not selling. As a result, right now, there are very few inventory out there all over the U.S. We're seeing a historic low inventory of homes to buy, and demand are still very elevated, even at a 7% interest rate. Go figure. So with that said, builders, they can offset the lack of inventory. They are supplying, be it on a limited basis, of new homes, new builds in the market. They are the third and final category of winners, builders. So the losers in this housing marketplace, I'm going to say, I'm going to go across the board. The losers are everybody else. Okay. So with that said, for the next 5 minutes or so, Richard, I want you to share your thoughts. What are your thoughts about the winners and losers of this housing market?
The winners are anyone that participated, right? Whether it's a builder or a buyer or the realtor or whoever it may be, it's whoever participated in this market, got away from the mass hysteria, and actually looked at the hard data, right? The issue that we have a supply and demand problem nationally that's nowhere close to being solved, that got away from, of course, the high interest rates, that realized that we're married to the property, but dating the rate. The rates are temporary. So everyone that took action in this market, instead of being a victim to what they thought was happening around them, which as we all know is wrong. I can't tell you how many people called me when COVID hit and don't make your mortgage payment and everything that was on the news. Don't make your rent payment and all this stuff that was on the news. Oh my God, real estate, how's it going? And all this fear and all this fake negative momentum that was created. And in all reality, what happened in that year, literally probably a year and a half after COVID, house prices nationally rallied 30% in a year. Rents went up dramatically, right? It just depends on who you are on the inside, right? If I see a crowd running a certain direction, I'm that idiot who's probably going to stand there and go the opposite direction and figure out why they're running, not just start running myself, right? And it's important to educate yourself before you start joining this crowd and this mass hysteria. And more often than not, the person that walks the other way is the one that ends up obviously making big moves. And I think we've seen that more than ever in the last couple of years, right? Whoever's caught on to that mass hysteria, ran with the crowd, they missed out. And the age-old adage is, of course, by the time there's public knowledge of something is happening or happened, whether it's a good thing or a bad thing, that ship's already sailed, right? If you found out about it, it's already happened, right? So most of the people are reacting instead of being proactive to changes in the market. And any market, any change in the market, whether property values are going up or going down, it leaves an opportunity. There's always an opportunity to do well when there's volatility. And there's a lot of volatility right now. And I think instead of hiding under a rock, most people need to look for those programs and those niche things that will help, obviously, to grow and succeed in these times of volatility.
Absolutely. Nothing more need to be said. Very well put. And yep, that's our take on the winners and losers in this housing market. Thank you, Mr. Richard Advani. This is Seewing Yee. Thanks for watching. Have a nice day.